Hello and welcome, guys. We'll mark some levels for the coming week on Nifty, BankNifty, and Sensex. You'll also get to get a sneak peek into how I think about the markets. For now, these are the profiles. What I can see clearly is this market has been ranging in this area. We have these profiles inside this range. Okay, so one major range to look for is this one. Okay, if I do a fixed range market profile over this entire range, what I can clearly see is there are two distributions. Okay, there is a distribution here which is basically these 1 2 3 profiles, and the latest double distribution, the upper distribution out of the double distribution day that we had on Friday. Okay, so I can clearly see one distribution happening above this stronger, bigger, major distribution. So we can clearly say that, for example, what is the balance that was persisting for the past few days inside this range. So let's go inside a little bit and see what. So I can clearly see, if this is the range, then there are pockets of ranges inside it. You can clearly see these pockets of ranges which I am marking. Okay, this is an outlier. And then finally we had this range. Okay, this is the latest balance zone where we broke out and we are sustaining above it. Okay, what I'll do is, we are still not out of this bigger range. Okay, so what we'll first do is we'll first try to understand that, okay, if this is the bigger range and then there are two ranges inside it, like I spoke earlier. Okay, this and this one, right? Then what we should do is mark this range here and then try to mark this range above. These will give us two trading ranges inside a bigger range. Okay, without making it much complicated, I'll quickly show you how to do that. Okay, just get fixed range market profile, choose any starting point. All we need is this pocket. Okay, and try to capture up to this. Okay, before the breakout that happened, and we had a double distribution day. Okay, now I can clearly see, okay, this is the composite profile for the last few trading sessions. Okay, so this is your major range that you want to look out for. Okay, this becomes also, if you can look closely here, this is also a range. So what we'll do is we'll keep the POC as it is, which can also function as the value area low of this smaller range that happened on Friday. Okay, we will also mark this POC, which is previous sessions POC. Okay, we have the value area high of this range coinciding with the value area high of this distribution. So I'm going to keep everything as it is. Maybe we can mark what we'll do is we'll color code this as green itself, so that we signify that this is the value area, the latest value area. Let's get it a little bit below, but it will also function as the POC. So composite POC plus previous value area low. This is the previous POC, and then this is the previous value area high plus composite value area high. Okay, this is the composite value area low. So we have a bigger range, we have the latest balance of Friday, and now we will also mark this balance area. Okay, there is a slight balance area in between which I'm going to mark, which is now a trend zone. See, if it was first a zone of sideways activity and now markets have pierced through it in single candles, largely due to the range breakout, short covering kind of a scenario. But we are still going to mark these levels. Okay, so this is the yellow value area. Although it's a trend zone, I'm still going to treat it as a sideways zone. Most probably it can go and settle here, we don't know. Anyways, and then this is the distribution above with its POC being this and the POC here being this. Okay, so we have 1, 2, 3 and then a bigger range. So this is one range that we've got, this is one range that we've got, and then these are the two ranges. Okay, understood. The bias is obviously slightly bullish, so let's try to see if we have any levels above 25 120. Okay, so from October we have some levels from October. What I can clearly see is, are these two okay, these two rejections from here. Okay, what I want to do is mark this value area as high, which also coincides with these rejections or these swings. Okay, so I'm just going to have one level here, a simple white level. Okay, this is value area high but without any value area lows, because the low is already inside this yellow value area. We do not count it. We're just going to count this as a value area high, and we've made it transparent to signify that only this is a weak one level of this profile. Okay, the distribution above this is essentially this one then, right? That gives us a bullish trade up to 25 250 from 25 190, which is really not a really good trading range. Maybe we can target some scalps or something. Then immediately above we have another swing level and then one more swing level here. Okay, these are the levels I'm going to mark. Okay, this does coincide with this profile. Merge it to the left. Now I can see, okay, clearly there is a distribution here. So then let's mark that 25 616 is good enough as a range. Anything above this, I would think that this is the distribution, small distribution. We'll just mark these levels. Okay, but I'm not going to mark any POCs over there. Just simply a distribution that I found here, which is a weak distribution, but there are some levels, right? We can't just have a distribution at 950. If there is some distribution, we should have it. But remember, anything about 25 600 or 660 is a direct trade towards 930. So maybe we should also merge these two and see. Yeah, okay, so let's mark this in a different color. This is the distribution. So what I'm trying to say is anything about 25 660 is a really good bullish trade for us, and these are the levels in between that we can use. So anything about 660, 817 becomes the first level, 899 becomes the next level, and so on and so forth. I think we've marked 1000 points up, which is more than enough. Now we'll go back, right, and see. Okay, we have some really good levels upside. Naturally we would also want to anything. So okay, inside this range as well, let's mark some levels. Right, so I can see this distribution that can be used inside. So this becomes one more level which coincides with this support that has been created, a swing support on 30 minutes time frame. Good enough. Okay, anything below this, we have this distribution, and obviously this distribution is there, so I'm going to use this level which is common in between both, right? This is the value area low of this distribution, because this distribution is right after this distribution inside this bigger green range. This is the latest distribution, Friday, Thursday, the Thursday distribution. And then we've merged the Friday with the Thursday one. Okay, and this is the next distribution that you should be taking care of. And then below that is this one. I think we have good enough levels for bearish trades. If we go back down, 500 points is good enough in my opinion. Yeah, this is enough. Okay, I've marked these levels for lower time frame, like 30 minute, right? Now let's go and actually see what does the higher time frame tell us, right? And to do that, first we'll go on the highest time frame and try to understand where we are at, relatively speaking, using VWAPs. So I'm just going to remove these levels for a second until the data loads. All right, I think we have our data loaded. Let's go to VWAP and just do yearly. All right, the data has been loaded. I should have just used this now. Yeah. All right. Now what do you see here? Clearly we've broken out, pulled back, held. We've again pulled back, and we are holding. So let's see where we are holding. For that, first let's hide all the drawings, right? And let's understand whether we are above second standard deviation. No. So what has been done? We've broken out once, we came back, pulled back, and we were going down towards value area lows, and just before value area high, and just before we touched it, there was a reversal, complete reversal. So I'm thinking we go up till 25,300 tomorrow and try to take liquidity out. We are already, so let's first unhide all drawings. Okay, what do we have? This becomes your 2024 value area high, very strong level. Okay, this becomes your 2025 developing value area high. So I'm just going to mark it with a different color. Developing value area high 2025. Okay, sounds looks about good. No other levels we've got apart from this second standard deviation here. So I'm just going to mark it. Maybe as the price moves ahead, this becomes a second standard deviation for the week. So I think 25,356 is where we need to start thinking about reversals. Okay, as you might know, anything beyond second standard deviation, if you are into statistics and if you know what a normal distribution is, similarly we can use the same concepts here to understand, okay, if price probability distribution is calculated using these standard deviations from the mean of VWAP in this specific example, eventually the probability of price being above this is less than 10%. Okay, very low. So as soon as we touch and get liquidity, we might start coming back down. If we start holding above second standard deviation, which in my opinion should happen in the coming few days, if it starts holding about 25,356, then we have a very strong bullish market on our hands, and in my opinion, okay, we will go back up to all-time highs. Okay, cool. We don't have any other levels here apart from this one. So 2SD, developing value area high of 2025, but second standard deviation 2SD is equal to, look, reversals or strong rejection, reversal zone. Okay, be aware of this reversal zone. I'm telling you again, markets won't directly crack 25,356 and just shoot past up it. If it does, I'm just going to, it becomes a very simple trade, and as you might know by now, markets are not simple. If we start holding about 25,400, this becomes 25,400, 450 becomes the area where I directly enter for a 500 point move. It's just easy that way, but it shouldn't happen. So first, let's go to 30 minutes and try to see what's happening on the monthly. Okay, now we'll come to monthly players. Remove the second standard deviation, don't need that. Okay, monthly, I can clearly see these are the levels. Let's add a level here, because if we are taking a short from 24,990, there is a straight gap of 90 points. Okay, but there could be this last month's May value area high. Okay, wait, let's first load all the data. Yeah, it's loaded. So this becomes May value area high and monthly developing value area high as well. So I am assuming as the markets open tomorrow, this essentially moves upwards. Okay, like this. So 24,966 becomes the ultimate reversal zone for shorts. Okay, anything, no shorts below this. Take shorts below this. So good shorts below. Okay, this will become a mean reversion trade towards what? 24,825 plus mean reversion towards 24,700. These are the two references. So when we say, with respect to last month's value area, if we break this, we are going back to VWAP, and with respect to this month's value area, if we break, we are coming to 2820, and if we break 2820, then we will come back to 24,709, which is the value area low of this first week essentially. Okay, which is also coincidentally the VWAP of last month or May. So this becomes then good shorts below. Everything else is a long opportunity. Any kind of a level that is broken, really good long opportunities. The best long opportunity is this, but I don't think we'll get it. I think we'll already open above this and start holding somewhere. If we start doing that, it's going to be a straightforward bullish market from tomorrow. Okay. Monthly wise, I don't have any levels other than this one, which is VWAP, monthly developing VWAP. Okay. So then again, this becomes a really strong level. This also becomes a strong level. 24,965, 820. Then this becomes the composite high. So there are many levels here, guys. There's a lot of liquidity sitting here, and then here, and here in this entire area, which makes sense. Anything below 25,000 it's a psychological number as well. So 25,000 to 100 points below, we shouldn't be trading these shorts. Anything below this should be a great shorting opportunity from 828 to, sorry, 820, yeah, 830 to 700. Okay. The reason why I'm not taking shots from immediately 960 is because there can be traps. Let's assume this happens. Then I'd rather go inside a long here with shorts trapped here. Okay. So that's one thing I want to see. So I will not be entering shorts immediately in this zone. I would look for some kind of highly bearish day, or then some safer level that is below 24,900 or something. The safest is below 820 towards 700. Okay. On shorts, we are pretty clear on what to do. In longs, we have a gap here, then we have a gap again about 25 250. There is a 100-point gap. So these are really good long trades, I think. And then there is this range of 365 to 616, which is a 300-point range. Very cool long trades coming up for the next few sessions. Okay, so we marked these levels, and monthly and yearly as well. Sure, we don't need anything else now. Okay, let me save it. All right, so let's move to now Bank Nifty as well. All right, pretty much Bank Nifty is in a bullish all-time high. We've already broken out of this range that it had created, right? And we are holding about. Now all I want to do is just concentrate on this range. Okay, all we know for Bank Nifty is this. This is the range that you need to break for short bias, right? Very simple in Bank Nifty. And the next is obviously this range. Mark it from here, otherwise the range becomes too small. So I'm going to use maximum range that I can use from 802 to 650. Not really good, but not bad as well. Going to mark this low as well, where there are single prints here. Whenever there are single boxes, these are called single prints. It shows that market has moved fast from here, did not wait, and then those become supports or resistances as well. So I'm going to mark this level as well. And another level here. Okay, anything below this is going to be very risky for Bank Nifty in terms of longs trying to liquidate, plus markets being bullish will create very volatile environment if we have short moves here, and there can be reversals from any of these levels. Okay, this is a level that I've marked as a initial resistance, which now has been broken and we are holding above it. So now it can come back down to test this as the support, but very unlikely. If we break out above this, the levels that we get above this can be used, can be marked using our trusted tool, right? On monthly, what you can do is go to second standard deviation, third standard deviation for levels. Okay, now you can clearly see markets doing what? It's clearly sustaining above, and it has sustained above third standard deviation of last month. Basically this is giving a signal that value is sustaining above last month's third standard deviation, where this was the overvalued zone. Let's say this is basically an overvalued zone according to last month's price action. Okay, now price is sustaining above last month's overvalued zone. It is sustaining above second standard deviation on this current month's value distribution, which gives me a very good bullish bias towards at the least 57, right? Anything beyond that I really would not trade essentially before some new distributions are being created or balance zones. Okay, so we have our levels for bank nifty, and I'm also going to so let's first developing value area high of monthly developing value area high, second third standard deviation 3SD. Okay, and maybe this POC becomes monthly developing value area high 2SD. Okay, these are the two levels that you need, and then this becomes monthly developing value area high. Cool. 56, 190 and 114 are way apart, so I'm going to add one more green line here just to indicate that there is developing VWAP of June, right? These levels are good enough. Now we need to go to 1 day time frame and then move the VWAP to yearly and see. Okay, so clearly this year's second standard deviation on the highest time frame is also this. I think this becomes the resistance, guys. 57,000. Anything beyond this is ultra bullish, but there is like 5% chance this will happen. Okay, so let's call this developing value area high 24 2SD. Very strong reversal level. 57043 becomes a strong reversal level. I think sustaining above this is going to make the market super duper bullish. Don't know why, but this is not. I'm thinking, yeah, 3,000 points. I don't think bank nifty will move anything beyond 57043. Okay, we are overpriced currently. The mean is very behind. If you look closely, there's definitely a slope from here to here, but the mean is at 51,426, which is basically the fair value. And if we consider the fair value as a band or a zone instead of a single price, then at least 54,242. Yeah, if we sustain above 57,200 or something, only then we'll probably take further trades. No longs. Another thing that I am seeing is essentially there is a channel that has been created here. Okay, now this channel essentially tells us that market should have went and touched the red band. If we are getting rejected from the top second standard deviations, it should go back down here, retest or break down inside for the further mean reversion. But that's not happened. Multiple times it got rejected, came down, got bought out. Same thing is happening, and we had a very good breakout now. So I think this becomes like a bullish flag. Not technically the bullish flag pattern, so to speak, because I'm not a pattern trader, but it's giving very bullish signals. Okay, although we are at monthly developing value area high 3SD, so on the month time frame we are already overvalued. On the yearly time frame we are at second standard deviation. Anything beyond this is a 5% probability. You guys have to understand that all the normal distribution within two standard deviations, the probability of price falling in that is 95%. So automatically anything outside, falling outside that, above or below, is 5%. These are just estimated probabilities. Don't take it don't take them exactly, but it's good to know that okay, anything beyond that, if we start holding, it's sending a signal to the market, saying that although the price should not be here, it should only stay here 5% of the entire year, let's assume. It's still holding, and that is a signal that something that is supposed to happen in the market. Basically what's supposed to happen, we should mean revert back down, right? But it's not happening. Gives us a better chance at taking short covering trades. So what I'm going to give you is a simple thing. Let the market create some balance areas here, okay, in the coming few days on Bank Nifty. Anyway, premiums are going to be super expensive, so there's no point in trading Bank Nifty, at least for now. So yeah, I don't think we need any other levels, any other than this breakout. Anything above this would, I'd rather use the daily VWAPs, right, and use them as the levels for tomorrow or day after. If we start sustaining above 57,000, then maybe we will use these levels, okay? So keep this in mind. Other than that, there's nothing that I need to add in Bank Nifty yet, okay? Let's save this as well. Okay, wait, I have to delete something. So save as new layout, Bank Nifty futures, 9th June 2025, and we've created this as well, right? Now let's do Sensex. Sensex, pretty simple. You can look at Nifty and trade Sensex, and it can give you this. Let's do this market profile. Sorry, Sensex, instead of using the futures, I'm using the spot, and I'm using the normal market profile, not the tick one, okay? So now I see this distribution and this distribution overlapping with each other. I'm just going to mark the bigger distribution here, which is okay. Maybe we can make it a little bit tighter. Yeah, I think this is better. So it does mark the distribution of Friday, the upper distribution of Friday, and then I'm going to mark this distribution. Yeah, that is good enough in my opinion. We could yeah. Beyond that, I can see this one, this value area high. So I'm just going to keep it as it is. And then there is another distribution. So I'm going to treat this as a distribution, mark it, and also mark it as the POC. So we have some kind of levels above. Pretty much everything else remains the same, like Bank Nifty. I'll use some standard deviations for Sensex. But if I just close this, yes, I have enough levels. I'm just going to mark them. I've got really great shorts from here that I could try, or really good long trades from this point. So from 1, 2, 3, 4 and beyond, okay? This becomes my entry points here for scalping Sensex, okay? Good. Okay, let me save this one as well. Okay, I'll share all of these levels along with the video once done. I think we've got all the levels. Keep SIF Nifty in mind that Bank Nifty might revert back down and Nifty might go up. Okay, since and then it can create a divergence between two main indexes of Indian markets and give us a sideways market. So I think the next, if we open gap up, okay, look for something like rejection from these levels coming back down and then eventually breaking down or holding these levels and trying to pop back out. Since we are looking for bullish trades, this is where tomorrow we can probably see at around 12:30 to 1 o'clock is where I see this thing going up, like this. Or if we open too much gap up, let's say assume something like this, then wait for entire day, almost an entire day for the shorts to come down, for the shorts to actually come to the market, try to create weakness and get trapped again, creating this kind of a move. Okay, since this will be a short covering, will not put a deeper pullback, smaller pullback. This is where the majority of the move can come. Okay, so maybe this becomes the 25,200. This is where half of the day goes by, and then late Monday, so around 2:30, we can probably see a breakout happening. Okay, for Tuesday. I think these 1, 2, and 3 are the entry points for longs. Okay, everything else remains the same. I think we've covered most parts. I'm going to stop recording here. Hey, a quick reminder to everyone though that the new crash course batch is starting from tomorrow. So if you want to enter the batch, the last maybe you can do it before 7:30. It's closed, the registrations are closed, but I think we have a few spots left, so we can onboard you tomorrow before 9 p.m. and probably after markets. Okay, at the max. Tuesday we definitely close the batch regardless of how many students we've got. Okay, so this is done. If for everything else, just contact me on my Telegram channel and I'll try to help you. See you guys.